We all see those quick news flashes about a company's profits or losses,
Right,
right?
the headlines.
Exactly. But what's the real story behind those numbers? Today, we're diving deep into Britannia Industries Ltd.
Hmm.
On May 8th, 2025, they dropped their financial results for the last quarter and the entire fiscal year.
And we've got all the official info here, the board meeting outcome, the financials,
Consolidated and standalone.
and the press release, all the key sources.
So think of this as your shortcut, really. Your way to understanding Britannia's financial health for this period.
Exactly. Our goal is to pull out the key insights from these official documents, give you a clear picture without you getting lost in, pages and pages of data.
Okay, so let's get straight into it. Looking at the big picture first. Their consolidated sales, they hit 4,376 crores in Q4.
Which is a pretty strong jump, actually, 9% compared to the same time last year.
Yeah, 9%. And for the whole of FY25, they reached 17,535 crores in sales. That's up by 6% year on year.
Okay, so decent growth there. But here's where it gets interesting, like you said.
Right. While the sales grew nicely, the profit growth, well, it wasn't quite tracking at the same level,
Yeah, that gap is fascinating. So 9% sales growth in the quarter, but the consolidated net profit was 559 crores.
which is up only 4% year on year.
Exactly. And for the full year, net profit 2,178 crores, growing at just 2%.
So that difference immediately makes you think, okay, what's putting pressure on the profits?
Absolutely. What factors were at play there?
Definitely. Now, something investors always watch closely, dividends.
Ah, yes, the payout.
The board has recommended a final dividend of 75 per share. That's on a face value of €1 per share for this fiscal year, FY25.
Okay, 75. That sounds quite substantial.
It does, and this will be officially declared at their AGM, the big annual meeting, on Monday, August 11th, 2025.
Right. So think of a dividend as the company sharing a slice of its profits back with the shareholders, with you, if you own the stock.
And if you want to be eligible for this dividend, the key date, you need to remember Monday, August 4th, 2025.
That's the record date. If you're on the books as a shareholder, then you get the dividend.
Right. And they also closed their shareholder register from Tuesday, August 5th, up until the meeting on the 11th.
Standard procedure. But that dividend recommendation, 75, it definitely signals a significant return of value.
It really does. Okay, let's dig into what the management themselves said, what they highlighted in their press release.
Yeah, the commentary.
They talked about a, quote, tight consumption scenario, also rising commodity prices, changing channel dynamics, and even subdued demand across FMCG categories.
Wow, okay. So it sounds like they were definitely navigating a tricky environment. Lots of headwinds.
Yeah, it paints that picture, doesn't it?
Absolutely. And the fact they still managed that 9% sales growth in Q4 despite all that, well, it's just their strategies were, reasonably effective.
Makes you wonder how much stronger it might have been in a better climate, right? So how did they respond? They mentioned using strategic pricing actions.
Adjusting prices.
And focusing on emerging channels, those newer sales channels.
Like e-commerce, perhaps? Or modern trade?
Could be. Plus, it sounds like their efforts to be more efficient with costs really paid off.
Ah, the cost saving.
Yeah, saving them about 3% of their total revenue.
That's actually pretty significant. 3% of revenue is a big chunk.
It is.
Especially when, like they said, commodity prices are rising. The cost of ingredients, packaging. If that's going up, saving 3% elsewhere is crucial for protecting profitability.
Good point. It likely helped cushion that blow.
Probably did, yeah.
And they're not just cutting costs, are they? They're also working on reaching more customers.
Expanding their reach.
Yep, expanding their direct distribution footprint to around 29 lakh outlets. That's 2.9 million outlets.
Wow.
With a particular focus, they said, on getting into those rural markets.
Ah, the rural push. That's a common theme, isn't it, across FMCG?
It seems to be.
Yeah, huge potential there, but different dynamics. By going direct, they can maybe build better relationships, understand those consumers better, potentially boost sales and share.
And new products, too. We saw some launches mentioned.
Like what?
Like a premium range of Pure Magic Choco Frames. Interesting name, which started online first.
E-commerce first, okay? Targeting that premium end.
And something called Wink and Cow Grow.
Wink and Cow, isn't that their dairy brand? So maybe expanding that line. Into kids' nutrition, perhaps, with Grow?
Could be. And they also kept supporting their big legacy brands, promotions for Marie Gold and Good Day.
Right. Got to keep the core strong. So it looks like a mix, doesn't it?
Yeah.
Trying new premium things, maybe online.
Yeah.
while also doubling down on the established mass market hits.
Mm.
Makes sense.
One last thing on the management side. They emphasize their commitment to their ESG framework.
Ah, environmental, social, and governance.
That's the one. They frame it as people, growth, governance, and resources.
It's good to see that focus. For investors, for everyone really, it's increasingly important how companies handle these broader issues.
Yeah, it's not just about profits anymore, is it? It's about long-term value, risk management, reputation.
Absolutely.
Yeah.
Especially for a company the size of Britannia. It matters.
Okay, let's really get into the numbers now. The consolidated financial results. Drill down a bit.
Right, the nitty-gritty.
Total revenue from operations.
Yeah.
4,432.19 crores for the quarter.
Which aligns with the sales figure we mentioned earlier.
And 17,942.67 crores for the full year. But when we look at their expenses.
Yes, the expense side really tells the story of that moderated profit growth.
What stands out?
Well, the cost of materials consumed, it's huge.
Hmm?
2,439.63 crores just in the fourth quarter.
Wow.
And for the full year, a massive 9,859.45 crores.
So that's nearly 10,000 crores just on materials.
Exactly. It really underlines the impact of those rising commodity prices the management talked about. It simply cost them more to make their biscuits and other products.
Definitely puts that pressure on margins. What about other costs? Employee benefits.
Employee benefits expense was 164.51 crores for Q4 and 704.59 crores for the year. Seems fairly steady.
Okay. Finance costs. Borrowing money.
That was 30.65 crores for the quarter, 138.880 crores for the year.
And depreciation and amortization. Wear and tear on assets.
80.96 crores for Q4, euro 313.34 crores for the year. Again, seems broadly in line.
So after all that, the bottom line, the net profit for the period was 559.13 crores for Q4.
And 2,177.86 crores for the full year.
Which leads to the earnings per share, the profit per share of stock of 23.25 for the quarter.
And 90.45 for the year. That EPS figure is what a lot of investors focus on.
So breaking down those expenses, it really does seem like the cost of materials was the main squeeze factor.
It certainly looks that way. While they grew the top line, that increased costs for ingredients, packaging, and so on likely ate into the margin, leading to that slower net profit growth. The other big expense lines seem more controlled.
Okay. Now let's quickly touch on the standalone results, just the main India operations, excluding subsidiaries.
Right, the core business view.
Here, total revenue from operations was a bit lower, as you'd expect. 4,282.51 crores for Q4.
And 17,295.92 crores for the full year. That difference shows what the subsidiaries chipped in.
Makes sense. And the standalone net profit, also slightly lower.
Yeah, 557.2 crores for the quarter and 2,130.72 crores for the year.
Okay.
But interestingly, in the standalone results, under other income for Q4, they show 12.51 crores of dividend income.
Ah, dividends received from their subsidiaries.
Exactly. That kind of internal transaction gets netted out when you look at the consolidated group-wide picture.
Got it. Interesting detail. There was also something called an exceptional item mentioned.
Oh, yeah. What was that?
An expense of 24.79 crores for the full year. It was related to a voluntary retirement scheme, a VRS, at one of their factories.
Yeah, a one-off cost for restructuring, essentially.
Seems like it. It covered payouts for both their own employees and contract laborers, too.
That inclusion of contract workers is interesting. It suggests a pretty comprehensive effort to, maybe, streamline operations at that specific factory. These schemes cost money up front, but the idea is to save on long-term costs.
Right. Now, something really important, the auditor's opinion.
Yes, always crucial. Mrs. Walker Chandiak & Co., LLP, were the auditors.
And they issued what's called an unmodified audit opinion for both consolidated and standalone results for FY25.
That's good news. An unmodified or clean opinion basically means the auditors believe the financial statements are fair and accurate, no major issues found.
So it gives everyone more confidence in the numbers they're presenting.
Exactly. It's a crucial stamp of approval, really.
Okay, just wrapping up some other key details. The board meeting to approve all this was on May 8th. Seems like it was a long one. From 3:31 p.m. to 8:45 p.m. IST.
Yeah, hashing out the details.
Their main business segment is clearly identified as foods. No surprise there.
Makes sense.
And if you, the listener, want to delve into all the nitty-gritty, these full reports are publicly available.
Where can people find them?
On Britannia's own website, that's www.britannia.co.in, and also on the stock exchange websites NSE and BSE.
And often you'll find investor presentations alongside those results too, right?
Yes, good point. Those presentations can be really valuable.
Yeah, they often give you management's perspective, future strategies, maybe more color on market trends. Worth looking at if you're really digging in.
Definitely. We also got a quick look at their balance sheets. That's the snapshot of assets and liabilities at the end of March 2025.
What the company owns and owes.
Right. Consolidated balance sheet shows total assets around 8,838 crores. Total equity, the shareholders slice, about 4,381 crores.
And total liabilities, what they owe, roughly 4,457 crores. So equity and liabilities are fairly balanced.
Yeah, it seems reasonably balanced. Standalone figures are a bit lower, of course.
That balance sheet structure gives you a sense of their financial stability, how they're funded.
And finally, a quick peek at the consolidated cash flow statement for the year. Where did the actual cash come from and go?
Always important to follow the cash.
They generated a healthy amount from their main operating activities, selling biscuits and stuff. Net cash from operations was 2,480.65 crores.
That's a strong, positive operating cash flow. Shows the core business is generating good cash.
Yeah, investing activities generated a smaller amount, about 84 crores, but financing activities.
That's things like dividends, debt repayments.
Right. That resulted in a net cash outflow of 2,761.86 crores.
So cash came in strongly from operations, but a fair bit went out for financing, likely including that big dividend payment we talked about.
That makes sense. But that positive operating cash flow is definitely reassuring, right? Even with the financing outflow.
Absolutely. It shows the underlying business is healthy and throwing off cash, which gives them flexibility to invest, pay dividends, manage debt. It's a key sign of strength.
Okay, so let's try and wrap it all up then. Key takeaways.
Well, Britannia showed decent sales growth, especially in the last quarter.
Yeah, 9% in Q4, 6% for the year.
But profit growth was more subdued. 4% in Q4, only 2% for the year, likely squeezed by those rising raw material costs.
Right. Despite that, they seem very active strategically, expanding distribution, especially into rural areas,
Reaching almost 3 million outlets directly now.
launching new products like those Choco Frames and Wink and Cowgrow, while still backing the big brands like Good Day and Marie Gold.
And managing costs effectively, saving that 3% of revenue.
Plus a significant dividend recommendation, 75 per share.
And critically, a clean audit report. That unmodified opinion provides assurance.
So overall, it feels like they navigated a pretty challenging year, managed to grow sales, but profitability took a bit of a hit from costs.
Yeah, that seems a fair summary. Focus on expansion, cost management, and returning value to shareholders seems key.
Which brings us to our final thought for you, the listener, to chew on. Considering the, intense competition in this FMCG food space,
Always tough.
and Britannia's clear strategy focusing on both premium niches and that vast rural market. What do you think? What will be the biggest opportunities and maybe the most significant challenges they'll face in this coming financial year?
Yeah, thinking about inflation, consumer sentiment, competitive moves. What lies ahead for Britannia?
Definitely something to think about. And as we said, dig into those investor presentations and keep an eye on the news if you want to form your own deeper perspective.